There is a very big confusion when it comes to the shares interest rates, and I wanted to clarify this because so many people could be making the wrong decisions or investment decisions based on what they are seeing the market throwing out there. I know you're coming from a place where you're comparing this with your fixed deposit account or your treasury bills, the treasury bonds, or the money market funds, which you look at it and inakwambia the rate is at 10%, and then you put your money in expecting a 10% return on investments. Welcome to this episode on the Moneyversation series on shares, and I hope that you are following, because if you've missed the previous videos, then there are more that are coming and I don't want you to miss them, but you can still go to the archives and check the parts that you've already missed. So when it comes to the share interest rates, these things do fluctuate and they do not remain the same over a long period of time. So what you see today, over some given period of time, this is likely going to be changing. But the important part that I want you to remember is that investing in shares is a long-term affair. And now in the previous video, I told you that there are two ways that you earn from shares. There are two ways that you can make money from shares, and one of them is through dividends, and then the second way that you can make money in shares is through capital gains. This can be either positive or negative. So these ones combined can give you a rate of return. And now, to help you understand what happens to the share interest rates, for you to be able to understand what to expect, and I'm going to use Kengen. When I bought Kengen, it was at about 2.11 shillings. Ilikuwa ikienda sana ni 2.4, ikikuja inarudi 2.0 something. So it stayed at that range for a long time. I think like almost 2 years in a row. So by January, the rate of return on investment was at around, I think it was at 40%. So I'd say it was at this particular spot. So right now the price shot from 2.11, it's trading at around around 7.6, there about 7.6, 7.9. It keeps fluctuating. So from this point where it started here, it has come all the way. It came juu chini, keeps playing like that mpaka sasa tumefika at this spot here where we are as at today. That is August. And then it is now playing at around 300% return on investment. So if today I picked my phone and showed you the screenshot of where it has come from, you're going to be excited. Itakuexcite. And you see, this is the same thing that is applying kwa hizo companies zingine. KPLC ilikuwa 1.4, 1.6, 1 point thereabout, and right now imeshoot. Safaricom, for example, Safaricom was at 11 bob. Wakati I was doing a video on how to invest in Safaricom shares, it was at about 13 shillings, and right now it is at 26. Kiangalia rate kama hizo, they will automatically encourage you. You will want to make a decision based on that. But what you need to realize is that if you're coming in today, you are getting in at 7.6. You were excited about my 300% return on investment as at today, but then you're coming in at 7.6. So are you going to enjoy the same interest rate? The answer is definitely no, because this is your day one. Automatically, you've missed this part of the year where my growth happened from here to this point over here. So kama imeshoot in this direction, it means that this part wewe haukukuwa part of it. This is why you need to be very careful when companies are marketing to you the interest rates are equity funds and shares and telling you, oh, the year to date is ABCD. It is ABCD for those who are there from the beginning, but for you coming in right now, this does not guarantee the same effect for you. So now let me show you. So we've started today. We want to understand this interest rate. How is it going to affect you? Remember, when we were looking at the previous video, we realized that there are two ways that you can make money. One is capital gains, and the other one is through dividends. And when it came to capital gains, we said something that the growth can be negative and it can also be positive, or it can remain the same spot it is. So this price, for example, starting now today, the market could decide to take 3 trajectories. It might decide to keep the growth. Yes, mpaka ikuje, let's say at 15 bob. For this Kengen, yeah, inaweza amua iende paka 15 bob. The other second option, this market could decide to chill here the way it chilled for me like for 2 years at 2 point something and remain there. Penye ikipanda sana ni 7.9, inaweza rudi mpaka 7.11, so it could decide to play around that same line. Or the third option, the capital gains might decide to become negative and shift to this point. So by the time tunafika December, it is at this point where they are selling it now at 5 shillings, for example. So there are two outcomes for you and for me. Mimi nilikuwa from January, wewe umeingia August. So you've just started your journey around this time right now. The price for me was 4.5. The price for you was 7.6. My year will end at 5 kama things went south, and my return will be 5, take away 4.5, it will still be a positive growth. Hata kama itakuwa ni kidogo, like it grew from 4.5 and dropped at 5, that would be like 0.5 growth per share. So ikicalculatiwa in percentage, itapata like nili grow kitu kidogo tu on top of it, maybe like 10%. Haya, the other alternative, it could be at 7.11. So if mine is calculated from 4.5 to 7.1, then it means that ili grow na almost 3 shillings per share, which is almost like 90% return. You understand? Na ikitoka hapa kwa 4.5 alafu ifunge kwa 15, sasa itakuwa imepanda like almost 4 times. So these interest rates going forward, you're putting your money in, do not make judgment or try to become greedy and start calculating. Useme, my 1 million will grow to 2 million or by 3 million because it is at 300% as at today. Apana, it starts from this point going forward. So your starting point is at 7.6. So now we pray, where does it go from this point forward? Which direction will it take? So if it grows from 7.6, inshallah, to 15, then probably pia tutasema like alipata like 100% return. If the market decides to play on the same spot, ikimalizia 7.11, imeshuka from where you got it at 7.6, that would be like a negative 0.5 drop on the share price, meaning that growth yako ni negative at this point. Or the market could decide to go down from 7.6 to 5, and you would have had a drop of almost 2 shillings per share. Hiyo ukitoka hapo, hiyo ni negative growth. So interest rate in these shares is determined from the day that you put your money in, not necessarily from the good days that have already passed. That is a very important thing for you to remember when you're making a decision to invest. Hisi kama money market yenye hata kama iko 7.6 ni kitambo ifike 5, itakuwa imetake a very long time. In this line of investment, get in expecting to be there for a long time. By the way, things sometimes happen to be so good, in a short while you are in at 4, isha shoot imeenda 7.6 in months. You can decide to liquidate all your money and make money and grow, enjoy that capital gain. You don't have to wait for years ama take a portion of it, lakini kuna time yenye tena they can turn against you in a very short period of time. But what I wanted, the goal of this video was to make sure that you don't get confused when the companies are announcing and telling you, year to date right now we're giving 40%, 50%, 100%. Don't get overexcited. Understand that when I get in today, my journey starts right now, and it will be determined from today going forward. I hope this lesson helps you in making a better decision when you're getting to invest in the shares. Don't miss the other videos that are in line. Make sure you're following. My name is Otachi, and I can't wait to see you in the next video.